So this is the Silvergate article that I covered on, it was Friday, I think, which is one of the major cryptocurrency banks. So it said crypto focused bank Silvergate is shutting down operations and liquidating after a market meltdown. So what was interesting was it said here the firm has served as one of the two main banks for the crypto industry, along with Signature Bank. And what did they say about Signature Bank? Yeah. Silvergate has just over 11 billion in assets compared with over 114 billion at Signature. Bankrupt crypto exchange FTX was a major Silvergate customer. So everyone was thinking, oh yeah, it's bad, 11 billion, but at least it's not Signature Bank, which has 114 billion in crypto assets. And then we just learned yesterday, NBC reported, regulators closed crypto focused Signature Bank, citing systemic risk, which is nuts. So now Silvergate and Signature, the two biggest crypto banks, are shut down. New York State regulators on Sunday shut down Signature Bank, a big lender in the crypto industry. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by the taxpayer, the regulator said. So New York State regulators on Sunday shut down Signature Bank, a big lender in the crypto industry, in a bid to prevent the spreading banking crisis. We are announcing a similar systemic risk exception for Signature Bank, New York, which was closed today by its chartering authority. Blah, 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 blah. The point is, why did Silicon Valley Bank and Signature Bank shut down? They shut down because basically the banks took your money and they bought bonds with them that are worth that yield 1.5% because interest rates were very, very low. And they were like 10, 20, 30-year bonds. But then the feds, within like a year, raised interest rates 4%. We're at like almost 5% interest rates right now. So normally, what the bank does when they need money is they sell the bonds, and they could get pretty much the face value, maybe more, maybe a little bit less, on the market, and then they have more money to give people if they want to withdraw their money. If they want cash. The problem is that now people can buy 5% bonds, and the bank only has 1.5% treasuries on their balance sheet. So they can't sell them, or they'd have to sell them at a significant loss. And therefore, even selling the treasuries on the balance sheet, they were unable to meet the withdrawal, the demands of customers for their withdrawals. And that is what is called a bank run, right? So basically, there were two banks already. And the thing about this is that this could be an issue with a lot of banks. And it's just a matter of whether or not depositors are going to go there and try and take their money out, because basically all these small banks have a significant amount of holdings in treasuries, and they bought them before rates went up 5% to almost 5%. So they're all at a huge loss. They don't have enough assets to meet withdrawal requirements should there be a bank run, and it could lead to a cascade. So what happened is obviously they wanted to cut it. They wanted to cut it out before it spreads. So the FDIC and the Fed stepped in. And so basically you had these depositors, they wanted their money back. So the FDIC said you're only getting up to $250,000, and that means that would be disastrous, because all the startups and small businesses and things like that need to make payroll are not going to be able to do that, because they're going to need more than $250,000, and that would basically put them at risk of all going under. So the FDIC stepped in, and this is USA Today. USA Today says banking crisis. President Joe Biden says taxpayer funds won't be used to bail out Silicon Valley Bank and Signature Bank. So yeah, basically they said that the Fed came in and said, we're going to allow you to borrow against your treasuries for liquidity. And obviously you're going to be able to borrow it as probably at its face value. So you guys could have the money to meet your withdrawal demands. So yeah, they basically stepped in, and that's really why the market is so bullish. The market is so bullish because basically the Fed said we're going to bail you out, but it's not a bailout. So that's really that. I guess we have then, what do we have? We had TED Talks Macro said, unofficial quantitative easing begins on Monday, which is today. So if you look at the bank term funding program to provide liquidity to U.S. depository institutions, each Federal Reserve Bank would make, advances to eligible borrowers taking as collateral certain types of securities. Borrowers' eligibility. Any U.S. federally insured depository institution, including a bank, savings, or credit union, or branch or agency of a foreign bank that is eligible for primary credit, is eligible to borrow under the program. The collateral valuation will be par value. Margin will be 100% of par value. There are no fees associated. Advances can be requested under the program until at least March 11th. TLDR, the Fed's balance sheet will expand, and that will increase USD liquidity. Here's the correlation between the US liquidity. So there you go. And then we have Sami, my friend Sami. Give it a like, give it a retweet. Sami's awesome. Update, bills are now pricing in 35% chance of, okay, so you have that. So yeah, so the bank is, the Feds are bailing out the banks, and there's more liquidity in the system, which I don't know what they're I guess that is going to lower interest rates and things like that. I don't know. But basically the question is, okay, so they're bailing out the banks. The Fed can't continue to raise interest rates like this, like a half a basis point, 25 basis points, because if they keep doing that, that's going to crash the value. That's going to keep devaluing the current treasuries on every bank's balance sheet. And it's going to make them unable to meet the withdrawal demands of their customers. So if they keep on doing that, the more they raise rates, the less people want to buy the treasuries at 1.5% because it's just a lot lower payout, right? And the maturity is not for 10, 20, 30 years. So the banks are all going to see their assets crash, and they won't be able to liquidate them for the money needed to meet withdrawal demands. And so they're going to basically, this model where for some reason the Fed did not factor this in, and this model is not sustainable. They can't keep on raising rates. So the question is if they're going to raise even again. And I think Goldman Sachs is projecting that they're not going to raise. JP Morgan said maybe one more 25 basis point rate hike just to say that they're tough on inflation. But I don't even know if they're going to make it that far. I don't know if it would be responsible to do that. But the point is that the free money looks like it's going to come back a lot sooner than everyone thought, the so-called Fed pivot. So I guess the question is, what does that mean for inflation? What does that mean for inflation? Is inflation just going to run wild? I don't know. It's a good question. I mean, I could see inflation still going down just because that doesn't necessarily, I mean, it's not like COVID where people are just not working and getting tons of free money that they could spend. You know, you have, but yeah, I mean, I could see inflation just like maybe get sticky at 4% or something and not go back down to 2%. But do I see inflation going back up to 9%? I personally don't think that's going to happen. I think inflation is going to go down because when prices go up, people spend less. That's really what it comes down to. And the supply chain bottleneck is, getting fixed. And also people aren't just getting this free stimmy check that they could put into, that they could spend. So I think inflation requires excess spending. I think the money that's coming in is probably just going to go into stocks and crypto. So I don't know. It's possible that maybe inflation will go up again, but I could see it not going down, maybe staying the same, or maybe going down slowly nevertheless. But I don't know. It's going to be interesting to see what happens, because the good news is if the Fed pivots, your assets are going to the moon, which probably includes your HEX and your stocks and bonds and whatever. But at the same time, inflation could heat up. So will inflation heat up or not is really the question. But you see how the markets are reacting, and you see how obviously we're going to. We had our biggest pump in Bitcoin in a while, probably since. This is like the biggest pump since like Bitcoin was making new all-time highs. Let's go to the daily. And that was despite the high inflation. So we're going to see. Tomorrow's the CPI. We're going to see how the CPI prints, and we're going to continue to closely monitor the CPI. But yeah, we didn't have a pump like that since maybe even here. I mean, just look at that. That's crazy. I mean, I guess like here, but like this was like in a short period of time. So much price appreciation in such a short period of time. I think that shows the trajectory of the crypto markets if the Fed pivots, which it will. They don't have a choice. They don't have a choice. They can't keep devaluing banks' balance sheets, or else the banks are all going to be insolvent. Not just the small ones, not just Signature Bank and Silicon Valley Bank. So I think a Fed pivot is inevitable, and it's not happening at the end of the year like everyone thought, like everyone was thinking. And that's why you can't outsmart the market. You can't think, oh, yeah, I'm too smart for it. I'm going to buy at the right time. I'm going to wait for that pivot dump, whatever. Or I'm going to, wait till the Fed stops raising rates. And obviously it's not, or wait till the Fed cuts rates. Sudden things happen. And when they happen, the time to accumulate is over. And I think we're learning a valuable lesson here. We're learning a valuable lesson here, because everyone was expecting Bitcoin to crash to 10K, and everyone thought that this wasn't the best time to accumulate. But really, the best time to accumulate was when everyone thought it wasn't the best time to accumulate. Seemingly. Things can change, however. Maybe there's the biggest stock market crash ever and we go into a Great Depression. But I don't think so. So, yeah, that's it for that. Let's go take a look at the chat and see what you guys are saying. And just a reminder to go to furufinance.com. Consider booking a free one-on-one today, and consider joining the Patreon. But that's it for the Fed thing. You guys could see it's good for both Bitcoin, which is at 24.48, and HEX, which is at 8.38 cents. Are we going to see a 10-cent HEX this week? It's very possible. It's very possible, folks. The target is 12 cents, 11.8, which lines up with Axis Alive, 5555. So shout out to that. We got 102 people watching. Please consider hitting the like button, and please consider subscribing to the channel if you haven't already. But we're going to look at the chat and see what you guys are saying. Let's get you from where you are to where you want to be. Schedule your free call at furufinance.com. Schedule it on your own time, at a time that's most convenient for you, at a date and time that's most convenient for you. So go to furufinance.com today, hit the thumbs up, like this video,